cover 6 common pitfalls before we're going to head into Q&A. So as examiners and as a firm who've been working with charities for many, many years, there are a number of things that we routinely see that come through, and we've got a real passion to helping all organisations through these, and we try our best to provide a quite hands-on service in terms of navigating them. But these are the 6 we've come up with to help you be aware of. The first one, which Pete has covered really well today, is being aware of your fund classifications around restrictions, designations, knowing about that, remembering that choice around designated funds, that it's trustees' choice versus restrictions, which is you've got that formal restriction on the funds. Knowing that is really important, and we often find that it can cause some confusions and complexities at year ends where someone is unsure or are just simply putting things to unrestricted when they shouldn't be. So be really aware of it. I'm going to briefly mention now fund transfers. We often find that people get a bit confused about fund transfers, about when to use them, when not to use them. And the key message from us is, if you're unsure around fund transfers, ask and find out. There's some really good blog content on ExpensePlus. Pete's training materials are really good, and we've also got our own blog content. Do find out if you're confused about fund transfers. Second is carefully consider income recognition. Lizzie's done a great job of covering the really key areas to think about, and hopefully you've been able to see from us how subjective it can be. Do think about it, particularly around your year end when you're getting close to getting everything ready, and the months after your year end, of considering, actually, is there anything we need to pull into the year that we've been made aware of? That is often the default. Normally charities are more often pulling income into their year than pushing it out because of the weight of the criteria around probability. So do consider it really carefully, because it can cause some nasty surprises at the year end when we look at it as examiners. Next one is review for potential fixed assets at the year end. We often find that fixed assets causes confusion, and we do encourage, if you're following the year end checklist, to review your expenditure items during the year to see, has there been anything that meets our accounting policy in our accounts? Is there any equipment? Is there been any substantial purchases that really should be held on the balance sheet? Even if you don't know how to deal with that on ExpensePlus, letting your examiner or accountant know that you're aware of them, but I don't know how to deal with them, that is really helpful, because they can be aware of what they need to adjust and do. Number 4 is a biggie. It makes our eyebrows twitch slightly, doesn't it, Lizzie? To do with opening balances. Now, the reason why we bring up opening balances is a lot of accountants, year-end accountants, will prepare year-end adjustments that may be needed to get the accounts to where they need to be for examination purposes and to get concluded. It's very often that those adjustments don't end up back into ExpensePlus or your finance system, so that your finance system matches your year-end accounts. And the way ExpensePlus works, with it being a modular system, is sometimes people get a little bit confused about how to do that in the different modules. So it might well be worth having a look at that, speak to your accountant, or if you're really struggling and you're needing some support, we do provide a specific support service where, if you want to get your year-end adjustments onto ExpensePlus, you don't know how to do it, or your accountant doesn't know how to do it, we will do that for you, depending on how complex, how many it is, we can get that sorted for you. But do have a look at it. Do make sure you've got your balances, opening balances, all correct. Number 5, have you considered all related party disclosures? I want to make a specific plea to churches around related party disclosures, because we find that, obviously, we know the Charity Commission have found that related party transactions disclosures have not been done well historically. We find that it's even more complicated in churches. So if you are part of a church, it's very likely that, because of the way churches work, that you've got close family relationships between trustees, employees and others, there may well be more complicated related parties to navigate, of which some of those reporting requirements may be sensitive to your organisation. So we do really want to encourage a really good conversation around related parties and conflicts of interest, and it's often better to be prepared for that than for us to come and spring a surprise on you, or your examiner spring a surprise on you. So do think about it. And the last one, which Lizzie has already mentioned, but I'm going to mention it for her, because Lizzie is our in-house expert on trustees reports, about thinking about it. A lot of the time, trustees reports are thought about as a tick box exercise. They are not. They are there to tell the story narrative of what's going on in your charity, as well as being a compliance document. But what we really, really want to encourage is not last-minute trustee reports, which but have a really good purpose. They include and get a snapshot of the financial governance of your organization. So they're the 6 areas we want to mention. Take them on, have a think about them.